Hi, my name is Roger Schluter. This video is actually about the fees that are allowed and prohibited under the SBA 7A guaranteed program. As you know, most 7A programs do have a lot of fees. The SBA has built-in fees for their guaranteed loans as well as their SBA 504 loans. This video will only cover the fees that are allowed and prohibited under the SBA 7A loan program. The good news about most of the SBA fees is that they are usually added to the loan amount, which eliminates any upfront fees from your bank. Anyway, if you stay to the end, I will show you examples of the actual fees and of the prohibited fees. So anyway, the SBA levies a fee to banks who make the SBA 7A loan. This fee is a yearly fee that is usually up to like 1% of the guaranteed portion of the loan amount. Normally that's why banks will charge the max fee they can charge, because part of it is just making up for that 1% fee. And then this fee is paid by the bank, that is making the loan to SBA. The SBA fee that is added to the loan amount is based on the guaranteed portion, of course. It's only levied on the guaranteed portion of the SBA 7A loan. The amount will vary as to the amount and sometimes the maturity of the loan. So very short-term loans, and a lot of these are on the export program, but short-term loans with a maturity of 12 months or less will have a guarantee fee of 0.25% or 1/4%. And SBA does not like banks that will do a 12-month loan just for the 25%, the 1/4%, and then they'll do that. They'll keep rolling over that loan year after year. I have known some people in the export program who have done that, but it is frowned upon with the SBA. Most of those loans, the ones that are the short term that are charged, they're basically less than 12 months or less, and they only charge 1/4 point. Most of those loans are lines of credit loans or export loans. Anyway, the longer term loans, we're going to cover those now. And those basically, the SBA Express loans to qualified veterans and their spouses up to $350,000 with maturities that exceed 12 months, that's over 12 months, will have a fee of 0 when the program is at 0 subsidy. And they should probably tell you whether it is or not. And that's one of the benefits that veteran loans has. It should have many more, but that is one of the benefits that it does have if you're a veteran and you get a loan, and it is up to $350,000 with maturities that exceed 12 months. Other long-term loans are basically broken up into 3 parts. The first part is loans that are $150,000 or less that have maturities that exceed 12 months, have a guarantee fee of 2%. And then to encourage the banks to make these loans, they let the banks retain 1/4% of that fee. So anyway, that's loans of $150,000 or less, loans up to $150,000, I guess, and then maturities that exceed 12 months have that guarantee fee of 2%. And then the banks can keep 1/4% of that. Number 2, loans of $150,000 to $700,000 that have maturities that exceed 12 months will have a guarantee fee of 3% of the guaranteed portion. And this is really, this is mainly a lot of the loans that banks make. Because that's kind of the sweet spot from 150 up to 700,000. And they get a lot of loans that are in that dollar range, maturities that exceed 12 months. Most of the banks and most of the individuals want to go the max. So they'll go, usually 25 years on a 7A loan, if the assets will hold that out. Sometimes they have to do 10 or 20 years if you're talking equipment that has a shorter life than 25 years. And then number 3, loans of $700,000 to $5 million that have maturities that exceed 12 months have a guarantee fee of 3.5% that's of the guaranteed portion, up to $1 million, and then plus a guarantee fee of 3.75% of the guaranteed portion that's over $1 million, or $1 million to $5 million. And that's the guaranteed portion only. So really, you're limited to a $5 million loan with the SBA 7A. Examples: a $100,000 loan with an 85% guarantee, would have a 2% fee. That's 2% of 85% of 100,000 would be 85,000. So 2% of that 85,000 would be 1,500. Of which the lender, since it's under 150, of which the lender could keep 25%, or that would be $425 of that fee. So anyway, number B, or the next one would be a $5 million loan with a 75% guarantee, and basically in that range, anything over like I think 350,000 is all going to be 75%. Would have a $3,750,000 guaranteed portion, and then this fee would be the 3.5 times the million, which would be 35,000, and then the 3.75% of the remainder of that 75%, which would be 2,750,000, and or equals to 103,125. So the total fee would be 138,125. Now that sounds like a lot, but that's a $5 million loan with a 75% guarantee, which is $3,550,000. So it's really not that bad. Prohibited fees are processing fees, application fees, points, brokerage fees, bonus points. So anyway, a lot of times banks, and then other fees, a lot of times banks try to charge a lot of fees, and sometimes they will in 7A loans. SBA really won't probably catch them unless they go ahead and have to foreclose on that, because I think that's when the fees come out, because SBA is really going to scrutinize those loans because they want to make sure they owe the guarantee. So anyway, now there is another fee that I almost forgot about when I was doing this, and it's really kind of sad because I've actually gotten this fee, which is a packaging fee. The packaging fee can be done in two ways. Number one, a bank can charge up to $1,500 without any itemization or anything. They can just charge the $1,500. And then if it's over $1,500, they're supposed to itemize that on exactly what the borrower is paying for. And then the other way would be the percentage. Now this is only on the packaging fee. On the percentage, on loans of $50,000 or less, they would have to pay 3%. And for a packaging fee, they can charge 3%. And magically that comes out to $1,500. So anyway, and then for larger loans than that, it's up to 2% for larger loans, and then an additional 0.25 or a quarter of a percent for loans over 1 million. Now that's the packaging fee. So usually that packaging fee will either go to the bank who's doing the loan if they're packaging it, and then, or sometimes it can go to people that are hired by the bank to package these loans. Some banks don't like doing all the SBA work, so they will actually hire somebody to do that, and I've been hired before to do that. So anyway, to give you an example of this, on a $500,000 loan, using the 2% would be $10,000, and then on obviously a 1 million, it would be $20,000. But that seems like a lot, and they did change that because the $1,500 just didn't make it for doing these larger loans. Sometimes these larger loans, there's just a lot more work involved in it, and a lot more work with the borrower, with the bank, with the SBA. So really, I'm glad they did the percentage. I think most banks are charging that, but I think that they can either charge the percentage or the flat $1,500, but I don't think they can mix and match. I think they're supposed to pick one of those and do that for all their loans. So anyway, you're just basically they're gonna add it into the loan. They'll probably have it itemized somewhere, but it's kind of hard to argue with a bank, once they're gonna make the loan, because once they're in closing, you're in closing and you're seeing all these fees on there. There's not much really you can do about it. I mean, unless you want to say, I don't want to do the loan, I'm not going to sign the docs. So anyway, now there is a couple of exceptions to the prohibited fees. And the one is that there is a 2% fee, a commitment fee that can be charged under the Export Working Capital Loan Program, and that commitment fee is 2%. And then the line of credit, where a bank, and it's usually a line of credit, where a bank has to do extra work to monitor the assets that are purchased. So if you know, the example of this would be floor plan loans, like a car lot. They buy a car, they put it on the lot, and they're paying interest on it, and then when they sell that car, they stop paying interest on it. So the bank has to really monitor to make sure that you know, their assets are there, and they're paying the total amount they should pay. And under that condition, they could have that extraordinary service fee of 2%. So anyway, please subscribe to my channel and hit the bell to be notified of future videos. And if you learned something, I hope you hit the like button, because that does help the channel. Thank you for watching. My name is Roger Schlueter, and I will see you in the next video.